Assalamualaikum and hello to Dr. Abdullah Sanusi and my fellow friends. Today we from Group 10 will be presenting our case analysis on Adidas. So our group members consist of 5 people who is Siti Najwa binti Alias, Anis Natasha binti Muhammad Ghazali, Rima anak perempuan Hari Krishnan, Nur Fakihah Yasmin binti Rosdi and Fatin Nadia binti Muhammad Nasir.
Adidas, which in full Adidas AG was German manufacturer of athletic shoes and apparel and sporting goods. In the early of 21st century, it was the largest sportswear manufacturer in Europe and the second largest after Nike in the world. Adidas products are traditionally marked with 3-stripe trademark, which remain an element in the company's newest trefoil and mountain logos.
Next is Porter's Five Forces Adidas, a high rivalry among existing competitors, low bargaining powers of suppliers, high bargaining power of consumers, low potential entry of new competitors, and high potential development of substitute product. This is comparison of competitive profile matrix CPM between Adidas, Nike, and Puma. According to this total, Nike is the most competitive of all with a weighted score 3.51. Nike is the Adidas' toughest competitor. The total external factor evaluation matrix of Adidas using the opportunities and threats is 2.86 based on the weighted score.
Mission analysis. Mission analysis is used to identify the organization's strengths, weaknesses, opportunities, and threats. Mission analysis can be used to guide decision-making and strategic planning. Next, here are the 5 typical steps of mission analysis. Adidas' mission is to be a global leader in the sport goods industry. The company aims to achieve this by creating innovative products and services that meet the needs of the athletes and sport fans. For the development plans, Adidas needs to be aware of the needs and interests of its stakeholders, also needs to produce strategy of its competitors, and needs to be able to adapt to constantly changing trends. The slide shows the strength and the weakness of Adidas based on the internal factor evaluation analysis. Here are the opportunity and threats that has been identified based on the external factor evaluation of Adidas. Lastly is to develop the mission statements. Adidas company's mission is to be the best sports brands in the world, and it does this by designing, developing, and marketing innovative products that help athletes perform at their best. Next, functional analysis. Functional analysis is a process of identifying the business function and activities of an organization. First, human resource. Adidas does not have a chief operating officer (COO) and president of division by products or president of divisions by region. So Adidas should revamp its organization structure and utilize a design based on the strategic business units. Second is financing. Adidas suffered 78% of net income decline to the COVID-19. So Adidas should make a forecast for the company's budget and finances so that it is better prepared if there are unforeseen events in the future. The slide shows the internal factor evaluation matrix of Adidas. The strength of the key internal factor identified is the strong culture of performance, innovation style, brand identity, wide range of sportwear products, variety of distribution channels, invest in marketing and sponsorship. And the weakness is increased long-term debt by £500 million, decline net income by 78%, unclear chain of command, lack of coordination between divisions, and undiverse top management team.
Firstly, is the BCG matrix. Portion of Adidas's business categories according to market growth rate and relative market share is highlighted by the BCG matrix study. Based on the BCG matrix for Adidas shown above, sports shoes, being the highest selling product of the brand, can be classified as a star in the BCG matrix. According to the BCG matrix, Adidas's apparel and sportswear operations are cash cows. These markets have a sizable market share and they continuously produce steady income for the business. The question mark category of the BCG matrix applies to Adidas's equipments and bags. Although these markets have a smaller market share than the other product categories, they offer rooms for development. Last but not least, hats and sunglasses, with their low market share and limited growth potential, fall under the dogs category. Secondly, is the space matrix. Factors that make up the space matrices axis are, firstly, the financial position. It consists of return on equity, net income, working capital turnover, P ratio, return on investment. Secondly, is the competitive position. It consists of market share, global sports players dominating the China market, marketing in booming urban areas, and engaging customers to collaborate. Thirdly, is the stability position. It consists of technological advancement, oligopolistic metrics, product and development, transportation costs, public awareness for environmental sustainability, and inflation. Last but not least, is the industrial position, which consists of projected revenue, projected 3-year growth, supply chain and resource allocation, financial assessment, and Adidas and Reebok's combined effort. Based on the space matrix above, Adidas is located at coordinates 1, 0.6 in the accuracy quadrant of the space matrix. This demonstrates Adidas' strong competitive position and the commitment to growth-oriented business practices. Moving on is the IE matrix. The analysis of the IE internal-external matrix provides a significant insight on Adidas' strategic positioning within the sportswear sector. Adidas is positioned in the IE matrix's V quadrant at the coordinates 2.76, 2.86. This quadrant represents a hold and maintain approach where the firm should concentrate on preserving its competitive edge and maintaining its current market position.
Next, SWOT metric, which contains of strategies, weaknesses, opportunity, and threats. First of all, Adidas' strengths are the brand value, an iconic brand with a prestigious legacy, and younger customers prefer Adidas better. However, the weaknesses of Adidas is they had supply chain shortage, price of product is expensive, and limited product line. Next, for the opportunity Adidas had is they can use e-commerce to increase their sales, investing in smart materials for product, and also be growing in sportwear industry. Last but not least, the trade, which is the competition with other brand, supplier demoncy, and also Adidas lost their trademarks. As for the grand strategy metric, we can see from the graph that Adidas landed in quadrant 1, which show the market growth for the Adidas is strong.
This is analysis of QSPM matrices that contains opportunity and threats. And this contains Adidas strengths and weakness. Based on QSPM metrics, we found out that product development is the best strategy to be implemented as the total activeness score is more than market development strategy, which is 5.99. Next is recommendation of strategy. First, innovation of differentiation of product from their competitor and attract customer. Second, sustainability practices that appeal to environmental conscious consumers. Thirdly, digital transformation by investing to e-commerce. And lastly, collaboration or partnership with athletes or celebrities. Suggestion of policy. First, Adidas should implement guidelines for employees in using social media and communication. Second, adopt a policy that reflects Adidas' commitment to environmental sustainability. Third, establish a robust supply chain policy. And lastly, develop a policy that addresses the protection of customer and management data. Next, actions to be executed. Adidas should conduct research and analysis to understand customer and competitor trends. Second, allocate resources, both financial and human. Third, develop the implementation plan by create a detailed roadmap. And lastly, continual improvements by update policy and strategy. The conclusion for this case analysis is Adidas strategy are derived from matrices such as SWOT matrix, BCG matrix, space matrix to create a QSPM. By implementing these strategies, Adidas aims to have a successful business venture.